these universal lives, they need to be taken care of. You need to get your insurance reviewed by someone who knows what they're doing. Hey everybody, Matt McKay, Safeguard Insurance, back with the IUL series. I know we said we were only going to do 6 episodes, but guess what? We've got some bonus coverage. As we were starting to post these and everything, we started thinking and we had some feedback, and we realized, you know what? We just left a gaping hole in part of the conversation about IULs and universal life in general. And so we just want to make sure that we cover that. There's a big stigma with universal life that really we need to address because a lot of people have had some experience with old universal life. And so, again, we talked about pros and cons, and we talked about underfunding your universal life in several episodes. Mentioned that if you don't fund it correctly, if you don't overfund the policy, then you are taking on the risk that your policy could run out. Well, to back up a little bit, universal life was a concept that came out in the early 80s. And it was this new thing. It used to be that whole life or interest-sensitive whole life or whole life with dividends or whatever was the way to go. And that was the only way that you could get growth in your life insurance policies and get significant cash value. Well, now this came out as an idea that they would base these policies on a lower premium and base it on interest rates. So basically the company would be in the background investing in treasury bills, which used to be in the above 10% interest. Okay? So 10% interest would be nice if I put that in the bank account, right? I get 10% on my money. I've got $10,000. Next year I've got 11. That's great. But guess what? That doesn't happen anymore. Why? Because in the late 90s and early 2000s, interest rates plummeted. They went way down. And so these life insurance policies were based on the interest rates, and they almost put it in as, I like to tell my clients, they almost put it in as a joke that, oh, hey, there's just 4% interest. That'll never happen. Well, guess what? It happened, and it happened to the degree that it was way below it. So within these policies, if you look at the maximum charges allowable, the companies are allowed to charge extra premium, extra cost of insurance up to a certain amount in those policies. And a lot of times they've moved more towards the maximum than laying off of that. So not only do you have low interest, but you have high charges in these old universal life policies. And what happens is, long story short, you get a letter in the mail, and maybe this has happened to you or it's happened to someone you know. You get a letter in the mail, you've paid your premium faithfully, you set it up on the target premium, quote unquote, or maybe a little lower or something like that. So you set it up on the target premium that they say, this should work. Well, you get a letter and it says, hey, John, you have been paying on your $50,000 policy. You've been paying $40 a month. And you've been paying that for 30 years. Well, it's come to our attention that your life insurance cash value has gone down, and within the next 2 months you will be out of cash value and your policy will lapse. Your options are, you can let it lapse, you can take a reduced amount and try to pay less premium, or try to fix this and pay $200 a month. What do you think? What do you want to do? You have a few weeks. Good luck. and this person is generally late 60s, early 70s. Maybe if you got lucky, you're into 75, if you want to call that lucky at that point, because then you've got to figure out, how can I make this life insurance work? Or I've got to be healthy enough and be able to afford the premium enough to be able to get another type of policy. So it can be very frustrating, and it can be something that insurance companies have gotten sued over. And unfortunately, it's part of the contract, and it says if you don't do this, if the policy is not funded or whatever, you're liable for this, and your policy will lapse if you run out of cash value. And so we've had some horror stories with these universal lives. When I was with Transamerica, we had all these old universal lives, and it was my job to go out to people, and some of them were in great shape or pretty good shape, and it was a much more pleasurable conversation. Hey, you've got $15,000 of cash in here. What do you want to do with this? Well, some of them were coming in trying to put a Band-Aid on a bullet hole is what I say. Basically, these policies are dead. They are not going to work. You can't pay $20,000 today and fix this policy. You can't do it. It's so low. You're now so far into it, and you have no ability to build back interest on money that isn't there in the account. And you can't you can't drop in $20,000 because it's going to turn your policy into a modified endowment contract or a MEC, and that's going to create tax problems for you. So what the heck are you going to do? And I have to have these conversations. Sir, you have $300 in cash value. Your policy is going to run out in 5 months. What do you want to do? That's the conversation I had to have. And it's like a $100,000 policy. And this person's relying on that as permanent insurance. I thought it was whole life. That agent lied to me, whatever. And maybe sometimes the agents didn't do a good job explaining how the policies really worked. They didn't attempt to get the client to pay more money. But honestly, sometimes people in the moment just don't want to pay more than what they want to pay. And they set that up, and then if it's not maintained and the same agent doesn't come back, or another agent doesn't come back and ask questions and be sure to reproject the policy, these things can happen. And so nobody anticipated that these interest rates were going to go down like that. I had an old boss at Transamerica that was saying, we never, he was this kind of country guy. He said, we never anticipated that it would go down like this. It just didn't happen. It wasn't even on the radar. We didn't know. And, a lot of people stayed up late at night thinking about it. And the guy who made these didn't get any sleep after 2005 and all that. And, it's frustrating. But the question is, number one, what do you do from now? It's happened. What's next? Okay? You've got a policy, or you've got cash value. What do you do with it now? Or it just ran out. That means you need insurance, right? You relied on this. What are you going to do? Also, when we talk about index universal life, I know we talk about IULs, index universal life, whatever. They're totally different from ULs in terms of they're much more diversified, much more thought out. They're based on expecting people to live longer. So there are a lot of factors that make an IUL much more viable as an option versus an old UL that just had the interest rate that was locked in and always going to stay below 4%. So I just wanted to bring that to you as a bonus thought, because I know there's that stigma, and I don't want you to get caught up in that label and keep you from being able to make another good decision. Because even if you were in that universal life and you did pay $40 a month for a $50,000 policy, do you know what that would cost to get a whole life policy? It would cost much more. It would have cost you probably double or more. And would you have even bought it? Also, and I know it can be frustrating, you didn't put as much money into it, and you had all this coverage all these years. So if you twist it a certain way, it's not a bad thing. It can be very frustrating to know that this is how it is. And I'll leave you with this last thought. These universal lives, they need to be taken care of. You need to get your insurance reviewed by someone who knows what they're doing. Why? I had someone that had a $75,000 policy. We're looking it up, checking this out, and we can't find anybody. It says maybe this guy might have died 3 years ago, and he has $275 in cash value on a $75,000 policy. We looked them up on Facebook and finally messaged them, and they messaged back like a week or two later. We ended up getting with them. His ex-wife ends up getting paid $75,000 on life insurance that hadn't been paid on in 3 years because he'd been dead. He used a P.O. box and nobody could find him, and we happened to look up his last name on Facebook and found a few people in his hometown that might have been his relatives. Otherwise, that policy would have lapsed, and $75,000 wouldn't have been sent out to somebody. So many lessons to learn in that. That's an ex-wife getting $75,000 that desperately needed it on someone who passed away 3 or 4 years ago that may not have intended for her to get it, but $75,000 happened because an agent happened to take the time to figure it out. That doesn't always happen. And you need to check your policies. You need to check your life insurance no matter what it is. Is it a term? Is it UL? Is it whole life? Have you had a divorce? Have you had kids? Is it less than you thought? Is it accidental? These are all things that you really need to consider. Get an annual review, or at least once every couple of years. And if you haven't pulled that thing out in 5 or more years, you need to pull it out today and go talk to somebody, because you could be in some real trouble with your life insurance, and that is a huge investment that you do not want to go down the toilet. So just wanted to bring this bonus coverage. Get your life insurance reviewed. That's the whole point of this whole series. Check it out. Consider your options. Talk to someone who knows what they're doing, and I promise you, you will be in a better position than you were, even if you don't even make a change to your life insurance. If you just review it, check it out, consider your options. Hope this has made a difference in your life. Let us know if we can be of assistance on a personal level, or if you know someone who needs it. Hit us up, 270-904-6070. You can like and subscribe. You can give us a call, text, check us out on the website, social media, whatever. We're here for you. We care. We're doing this because we care and we want to make a difference.